You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to the Options Playbook, the program where we break down cutting-edge option strategies and explain how you can incorporate them into your own portfolio. Whether you're looking to grow your capital with some offensive maneuvers or protect your investments with defensive plays, you can find them all in the Options Playbook. The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities LLC, member FINRA and SIPC. Now, let's open the playbook and get started.
Welcome to Options Playbook Radio. This is Brian Overby, your host and author of the Options Playbook. Well, I think today we're going to go in and we're going to do a rinse and repeat strategy. We had a lot of earnings that are being announced. I should let you know that we are taping Options Playbook Radio. It's Thursday, October 24th. The markets are open, and they are rocking and rolling today just because there's been a ton of earnings announcements. And as always on Options Playbook Radio, nothing's meant to be a recommendation, but I think we're going to go back to a trade that we had mentioned earlier, and I just want to talk about some of the dynamics of it. I say this year is the year of the straddle. We've talked about more straddles and strangles on the long side, buying long straddles, buying long strangles, than I think I ever have in many, many years. And it's because it's such a news-oriented marketplace, and a lot of that has to do with the person that's in the White House, be it good or bad. Bottom line is he does generate a lot of news. So with that being said, I'm going to look at doing another long straddle in Boeing. And I mentioned this on the other trades that we looked at in Boeing, or on the other Option Playbook Radio episodes, that Boeing is an interesting long straddle all the way up until the point that the planes fly. So until the planes fly, there's going to be still some news that's just going to hit the market and knock it sideways. And we just recently had that. So Boeing over the last couple of weeks is down about $20. They announced earnings yesterday, and that's why I find Boeing to be interesting again in the long straddle. Why is that? Well, the stock got beat up on the downside. They announced earnings. It came back a little bit, but the implied volatilities are starting to come out. Why? Because the earnings announcement was known to happen yesterday, and it happened. And so now, because that known event is going away, we still got tons of other news that's out there, but that known event is going away. I think it's once again worth looking at buying a long call and a long put at the same strike, otherwise known as a long straddle. So let's look at this trade. I looked at long straddles, just buying them outright, about, I'm going to guess, around a month ago. I don't remember the exact episode that I did this on a Boeing long straddle, so I'm going to change it up a little bit. I'm going to buy a long straddle, and then I'm going to look at selling a short strangle, out of the money option call, out of the money options, selling an out of the money call, selling an out of the money put with a very short term duration. And the concept will be that, yeah, this just happened. We had this major news event week in Boeing. So I want to sell something to try to help pay for some of this premium because Boeing is an expensive stock, $340, so you're paying up for this long straddle. So the long straddle, let's get to the trade, and then we'll talk a little bit more about the rationale and what strikes I picked and why. So once again, not meant to be a recommendation, but I think this would be a great paper trade to follow to see how the pricing of the option contracts move over time, over all the way out to the expiration. I'm going to look at a long-term straddle, and once again, we're just looking for news events that will rock the stock all the way out till December 6th. December 6th is 43 days away. Once again, the market is open. Boeing right now is trading at $341.98. It's up $1.48 after earnings today, so $341.98 up $1.48 after earnings. We're going to go out to the December 6th expiration, 43 days away. We're going to buy the most at-the-money long straddle we can, and that strike happens to be the $342.50 call and the $342.50 put. That entire straddle, just buying that outright, and I'm just going to round off here, is trading for about $23.50. So that long straddle is trading for approximately, and I'm just going to round off here because this isn't going to be the real trade, but it's about $24.50. That's approximately where the long straddle is if you just bought it outright. But like I said, we're going to change this up. So I'm going to look at the November 1st expiration, and there's still some premium left in these option contracts, even far out of the money. And that is an 8-day expiration, so 8 days away. I'm going to go way out of the money, and I want to make sure that we're going about the same distance out of the money as the debit that we could potentially pay here. And that's fairly important to me because if we are selling option contracts to help pay for our long straddle, we got to make sure that if a call or a put goes in the right direction and makes the big move to the downside, that it will cover the profit in that position, will cover our cost of doing the trade. And that's fairly important if you know what I mean here. So that's why we're going to go 20 points out of the money. So we're going to look at, on the put side, selling the November 1st expiration $322.50 put. And on the upside, on the call side, we're going to look at selling that same expiration, November 1st, $362.50 call. So we're 20 points out of the money on the downside, 20 points out of the money on the upside, and that's going to bring in $1.60 to help pay for our trade. And it's only got 8 days until the expiration date. So the midpoint for the total trade here would be $23.20. So this trade would cost $2,320 plus commissions, and commissions are getting lower each and every week. They're getting lower and lower across the industry. So $2,320 plus commission to put on this trade. All right, that's going to be our maximum risk of the trade. And our upside, it's kind of tough. It's basically unlimited once the front month option contracts expire. But we could sell another 8-day or another 15-day option contract if we would like to, depending on what's happening in Boeing. So, reviewing the trade, we're going to go out and look at the December 6th expiration, 43 days away. Stock is at $341.98. We're going to buy the $342.50 strike call, and then at the same time buy the $342.50 strike put. And then against that position, we're going to sell the November 1st expiration, $322.50 put, and sell that same November 1st expiration, $362.50 call. We want volatility in the stock. We don't care if it goes up or goes down. But if I'm doing this trade, if it goes in one direction hard, I want to make sure that I can at least pay for my net debit here. So if it does go to the upside and it gets up there quickly, I want to make sure that I'm selling the call side of this trade at least the debit that I paid for it, which is $23.20. If we fill at the midpoint, and that would be the same rule on the put side. Now, ideally, I'd like to sell it for more than that, but that is where I would like to at least trade that, because let's say this move happened tomorrow. I would definitely think about legging out of this trade. I would do whichever direction it went. So if it went to the put side, I would close out that put spread, or I would just remain long the put. And if it went to the call side, I would just close out that call spread, or just remain long the call. So this type of trade is set up to be legged into and legged out of. There's no concern with that whatsoever. You just don't want to do it too early on the trade. All right. And then let's hope that the next news event in Boeing, once again, moves the stock 20, 30, 40 points, which it has done previously. It's made that type of move over and over again ever since they had the planes crash and that horrific event. All right, that's it for this episode of Options Playbook Radio. My name is Brian Overby. I'm known as the Options Guy here at Ally Invest. You can email me at theoptionsguy@invest.ally.com. Thanks for listening. We'll be back at the same time, same place next week. Until then, may all the options that you bought finish in the money, and all the ones that you've sold finish out.
The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities, LLC, member FINRA and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.